This is Nightly Business Report with Sue Herrera and Bill Griffin.
We've come to a very substantial Phase 1 deal.
Phase 1, the U.S. and China reach a partial accord on trade and said tariff increases will not go into effect next week, giving investors something to cheer about.
Brexit breakthrough? The odds of the UK making an orderly exit from the European Union have improved, and that has lifted sentiment.
So what's next? That is the big question investors are asking, with a heavy dose of earnings just around the corner. Those stories and much more tonight on Nightly Business Report for Friday, October 11th. Good evening, everyone, and welcome. What a day and what a week. On this Friday, the market got a little of what it's been looking for, a partial trade deal. President Trump met with China's vice premier at the White House, where the two sides announced the first phase of what they call a substantial trade deal. Investors were upbeat all day about something, anything happening, and they got it. The Dow Jones Industrial Average advanced 319 points to 26,816 after rising more than 500. The Nasdaq was up 106 and the S&P 500 rose 32. And all of the major indexes were higher for the week on the hope that progress was being made in trade. Bob Pisani has more on the market's response.
The rally rolled on today with the Dow having its best day of gains since early June. All three major averages snapping 3-week losing streaks. Investors cheered prospects of a partial U.S.-China trade deal. The question now is, how much more steam does the rally have left? The S&P has moved almost 40 points in the last 24 hours, now just 1% from its old highs. The bigger question is, does a mini deal get the markets through Christmas? The general consensus among traders is it's not clear. The key problem for the markets is that it doesn't really change the lower growth narrative for 2020, at least not yet. And again, we don't have a lot of details. And it certainly doesn't end the trade wars. This is the battle over 2020, where we'll see battles over capital flows and export controls and industrial policy. Finally, two other factors fueled today's rally besides trade talk. That's a potential Brexit breakthrough, which sparked a rally in Europe, and word that Hong Kong protesters are discussing dialing down the protests, and that lifted the Hong Kong stock market by better than 2%. Next week, fourth quarter earnings season will kick off with major banks like J.P. Morgan, Goldman Sachs, and Citigroup all reporting, and the markets will finally shift their focus back to the fundamentals. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Day two of those trade meetings in Washington wrapped up early this afternoon. Then negotiators headed to the Oval Office, where the first part of the deal was outlined.
Because it's such a big deal and it covers so much territory that doing it in sections and phases is, I think, really better.
Kayla Townshe's been covering the story for us. She joins us tonight from the White House. So, Kayla, what is in this partial agreement?
Well, Bill, China pledged transparency on its currency moves. It also removed some barriers to entry for non-Chinese financial services firms. So those firms don't need a Chinese investor to operate there. In response, China will be buying up to $50 billion in U.S. farm products, and the U.S. will not be raising tariffs to 30% next Tuesday on $250 billion in U.S. goods.
The president mentioned phasing this in, so what's the timeline for getting it done?
He says his negotiators will be trying to write the substance of this deal over the next 4 to 5 weeks. That timeline is crucial because on November 16th, President Trump and President Xi will both be attending a multilateral summit in Chile, and that's where it's expected this deal would be signed. So the clock is ticking for them to actually put this agreement on paper. The president says after that, Phase 2 negotiations will start immediately, but those are open-ended. We don't know when those will wrap or whether there are any deadlines associated with those. And the president says there could even be a third phase if they don't get everything they want in that second deal.
Well, what is there to be done? What issues still need to be worked out at this point?
Well, there's still a lot to be worked out at this point. For instance, China pledged to open the financial service industry for 3 specific sectors, but the U.S. was asking for a multitude of that. They were asking for several more industries to be opened, and they want China to deliver on that. They also want changes to China's intellectual property laws, which China so far has been unwilling to grant. And then there's Huawei. China has been looking for the U.S. to grant licenses to Huawei and to also remove the designation designation of a currency manipulator. Officials in the Oval Office today said those will come separately and perhaps sooner than any Phase 2 deal might.
Kayla Townshee at the White House. Thanks, Kayla.
And now to Brexit and the UK's efforts to leave the European Union. It appears some unexpected progress has been made and a pathway to a possible deal is starting to emerge. Villa Marx is in London tonight.
For the past 3 years, this French politician has walked, talked and breathed Brexit. Michel Barnier is the EU's top negotiator in talks with the UK, and by now even he may be running out of steam.
Brexit is like climbing a mountain. We need vigilance, determination and patience.
But today, Barnier met his British counterpart, Stephen Barclay, and their smiles and handshakes helped boost pound sterling. That's because currency traders and investors sense the two sides may be approaching a long, elusive agreement, one that may avoid a disorderly and economically damaging British departure from the EU. In private, senior European officials tell me they're slightly more hopeful, but in public they remain rather reticent.
I'm not going to go into emotions from the podium. We are working towards a deal because this is the determination to arrive at a deal. And I think if there is a will, there is of course a way. Otherwise, people would not be working on this.
Among those working hardest, the British Prime Minister Boris Johnson and Irish Taoiseach Leo Varadkar. Their shared stroll on Thursday afternoon seemed to spark a breakthrough that even the ever-eager Brexit basher, EU Council President Donald Tusk, acknowledged on a visit to Cyprus.
Yesterday, when the Irish Taoiseach and the UK Prime Minister met, they both saw, for the first time, a pathway to a deal. I have received promising signals from the Taoiseach that a deal is still possible.
Nice to meet you.
Back in Britain, Boris Johnson battered away questions about concessions he may have made over customs checks at the Irish border.
I think it would be wrong of me to give a running commentary on the negotiations, and why, with the greatest possible respect, I think. Look at everything that I've said previously. I think you can draw your own conclusions from that.
His critics may still consider him a political paper tiger. But if a deal is finally sketched out this weekend, the Prime Minister may have painted his way out of a particularly perilous corner. For Nightly Business Report, I'm Villa Marx in London.
Back here, the Federal Reserve said today it plans to start buying Treasury bills in order to avoid any unexpected strains in the money markets and to steady short-term interest rates. The purchases will continue into the second quarter of next year. Fed Chair Jerome Powell says this move is not designed as emergency stimulus, but rather to keep the plumbing of the financial system operating smoothly.
Let's turn now to Luke Lloyd to talk more about the markets and what to expect next. He is an investment strategist at Strategic Wealth Partners. Luke, welcome. Nice to have you here.
Glad to be here.
So we got a partial trade deal. The market was up about 500 points, and then it lost better than 200 points. So how do you read that? What was the market disappointed or just looking ahead till next week?
So day after day, the thing that continues to drive the market is the recent news about trade. And we're really trying to tune out the political noise right now and really take a long-term perspective. We really believe that we're going to trade range-bound until there's a certain deal that gets done. When I hear partial deal, I hear that they can't agree on big terms right now.
And what does that do to the market? I mean, you know, the big parts have been about the impact it's having on manufacturing and on agricultural especially. And that seems to be easing up a little bit with this partial agreement.
Absolutely. So right now, international data is kind of weak. So what that's going to do, this partial deal, is probably ease up tensions on that. But in regards to the international side, we're still seeing a lot of yellow flashing lights. And if we continue to see that, we're really going to be watching the numbers closely until they get better.
And does that mean increased volatility until we do get the final pen on paper?
So absolutely. So volatility is here to stay. We have the upcoming election in the year, and no matter if the trade deal gets done or not, and until we see growth reaccelerate and stabilize, volatility is going to stay. So really, we're going to be watching this upcoming earnings season these next 2 or 3 months to really make sure that numbers are good. The U.S. consumer is still strong. As long as the U.S. consumer stays strong, I think that's going to make the economy still be good, because I think the whole world right now is watching the U.S. consumer.
And they're going to watch the Fed later this month. The president said today in the Oval Office there he would still like to see them cut interest rates even though they have this partial deal. And in fact, the expectations on Wall Street for another cut this month went down after this deal was announced. You want to weigh in?
Absolutely.
What are you expecting here?
So I really think that the Federal Reserve is going to really cut interest rates this month, even though the probability went down because of this partial trade deal, because we're at least going to get one more this year, whether it be October or the end of the year. But really, we still think that the Federal Reserve needs to cut 2 more times this year to make sure that we fix this inverted yield curve and we really continue to go down the right path in regards to economic growth.
Luke Lloyd with Strategic Wealth Partners. Thanks, Luke.
Thanks for having me.
Meantime, tech stocks rose sharply today on the news of that partial trade agreement. Semiconductor makers in particular may be feeling the biggest relief simply because of that sector's exposure to China. Josh Lipton has more.
Chip stocks move on trade headlines, and for good reason. China is an important end market for these companies. Qualcomm, Micron, Qorvo, Broadcom, and Texas Instruments all get roughly 40 to 60% of their revenues in China. China is also a vital linchpin in semi-supply chains. Today, the chips moved higher. The SMH, an ETF that tracks the chips, has now surged more than 40% this year, on track for its best year in a decade. Beyond trade headlines, semis have moved higher on what analysts say are improving fundamentals, specifically that smartphone shipments have been better than feared and that a recovery in the data center business, they say, looks likely in the fourth quarter. Of course, there are risks for chip investors too. Do those improving fundamentals actually hold up? And big questions remain. There had been talk that the Trump administration planned to allow the sale of some supplies to Huawei, a Chinese tech giant that buys a lot of semiconductor components from U.S. companies. But administration officials saying they are not dealing with Huawei at this time. For Nightly Business Report, I'm Josh Lipton, San Francisco.
It is time to take a look at some of today's upgrades and downgrades. Johnson & Johnson was upgraded to outperform from market perform at Bernstein. The analyst says the legal overhang on the share price is overdone. The price target is $155. Shares rose more than 1.5% to $131.33. Boston Beer was upgraded to buy from neutral at Citi. The analyst cites, quote, terrific growth of its hard seltzer brand Truly. The price target is $448. The stock was up nearly 4% to $397.03.
Roku was upgraded to outperform from sector perform at RBC Capital Markets. The analyst there cited strong fundamentals as well as the streaming trends these days. Price target $155. The stock gained more than 4.5% to $121.60. Delta Airlines was downgraded to hold from buy at Argus Research. The analyst cited the outlook for increased costs and softer sales growth that the company talked about yesterday. Firm says that the stock is likely to remain volatile as a result, and shares fell a fraction today to $52.95.
Still ahead, our market monitor and why investors may be able to find some big gains in small cap stocks. Oil prices climbed after an explosion on an Iranian tanker raised tensions in the Middle East. That led to concerns of potential output disruption in that region. The commodity also got a lift from optimism surrounding the U.S.-China trade talks. Today, the price of domestic crude settled 2% higher.
In the news tonight, that California wildfire. This one broke out overnight north of Los Angeles. About 100,000 people have been evacuated so far, and some freeways have been closed. This so-called Saddle Ridge fire has spread to more than 4,700 acres. and the cause remains under investigation at this point.
General Motors took the unusual step of appealing directly to striking employees, circumventing UAW leadership. In a blog post, the automaker outlined the terms of its latest offer to end the work stoppage. In response, the UAW sent a message to its members saying it continues to work to get a good agreement and to end the strike.
Wendy's hopes customers have a big appetite for breakfast, and that's where we begin tonight's Market Focus with the burger chain unveiling to investors its full breakfast menu. Wendy's expects breakfast to account for 10% of daily sales. That menu will be launched early next year, and investors ate it up, sending shares nearly 4% higher to $20.78. Meanwhile, Ford said today it is seeing a decline in its second largest market. That would be China. Vehicle sales there dropped 30% in the latest quarter. The automaker is still planning to launch more than 30 new models in China over the next few years, including electric vehicles. Ford was up about 2% today to 878. And Fastenal topped Wall Street expectations as the industrial products distributor said that its strategy of higher prices helped offset tariffs and inflation. Shares rose more than 17% today to $36.34.
IAC Interactive is planning to spin off its controlling interest in the dating service Match Group to IAC shareholders. IAC will also eliminate Match's dual class structure. IAC was up a fraction to 227.03. Uber is increasing its presence in the Latin American grocery delivery business by acquiring a majority stake in a company called Corner Shop. Specifics of the deal were not disclosed, but it's Uber's continuing efforts to expand beyond its core ride-sharing platform. The stock rose more than 4% to $30.13. And SAP's CEO, Bill McDermott, will be stepping down. Two members from the software company's executive board will be sharing the CEO duties. This comes as SAP reported a preliminary rise in revenue and cloud bookings. Shares were up 9.5% to $126.20.
Time for our weekly market monitor. Our guest this week has three small cap stocks in the apparel retail sector. Jay Kaplan is co-manager of the Royce Dividend Value Fund. Jay, good to see you. Thanks for joining us tonight.
You're welcome.
And the first one is American Eagle. Now, this one has the combination of a high dividend yield, 3.6%, and the stock has been cut in half in the last year or so. You must love this for that reason.
Well, as the contrarian that I am, I do love stocks that have been cut in half, but it's also good when they have a good reason for the stock to go up. And let me tell you a little bit about why that is. They are the #1 seller of women's jeans in America. They're the #2 seller of jeans in total in the country. And there is a denim cycle, and jeans are back in popularity again. So that's really good. But what's really exceptional is they have a brand called Aerie. Aerie sells intimate apparel to young ladies, say ages 15 to 25, and it's a more authentic brand. It's regular people rather than supermodels of Victoria's Secret. Right. They're only in 23 states now, and it's going to be a nationwide business one day.
Your second pick is Designer Brands, DSW stores, and they're launching a new kids line.
You know, they put kids throughout their whole chain. That's been really good. They've consolidated an acquisition that they did in Canada. That's also really good. But what's really interesting is an acquisition of the Camuto brands, which will allow them to do their own private labels, and that should increase margins a lot. And you have a really big dividend there, too, so it's great.
Yeah, that one's almost yielding 6% at this point. But here's one that's not. That's Caleres. This is a company that's been around since the 1880s in various incarnations. It's an apparel retailer. Another one where the stock has gone down, but it only yields 1.25% right now.
Well, it does right now because they spend a lot of their cash on buying women's brands. They're one of the leaders in women's brands with Naturalizer and Sam Edelman, for example. But they also own the famous footwear chain, and there's about to be a product cycle with brand new Nike product there. So that should be really good and really exciting and be really great for sales.
So it sounds like you're really betting on the consumer. So the consumer is still strong in your book?
The consumer is strong. You know, when we talk about the fear of recession, and by the way, there is no recession yet, consumer spending is still okay, and the stocks have really discounted a terrible outlook. And I don't think the outlook is quite that bad.
And given the mandate of your fund, you're always looking for these dividend payers so that you're paid even if the stock's going down, right?
we are looking for dividends. We don't necessarily care if the dividends are large or small, but we want to see dividends, and we think that's a great indicator of what good management teams can do with free cash flow.
Very good. Jay Kaplan with Royce Dividend Value Fund. Good to see you again, Jay. Thanks.
Thanks again.
There has been a lot of talk among Democratic presidential hopefuls about taxing the rich, often arguing that they don't pay their fair share. The problem is no one can agree on exactly how much wealthy Americans pay in taxes. Robert Frank digs through the numbers.
The tax headlines this week were all about how the rich pay lower tax rates than the rest of America. Articles and op-eds in the New York Times, Washington Post, and other publications said that for the first time in over 100 years, the richest 400 Americans paid only 23% of their income in taxes, while the bottom half of Americans paid 24%. The research is from a new book by Emmanuel Saez and Gabriel Zuckman, the two economists at the University of California, Berkeley, who are advising Elizabeth Warren and Bernie Sanders on both of their wealth taxes. Now, the economists looked at all the estimated taxes paid, so that includes federal, state, payroll, local, and property taxes, and then calculated the total of those taxes as a share of people's income. Now, the numbers are proof, they say, that the rich should be taxed more. But other economists say their findings may be misleading. The economists did not, for instance, include the Earned Income Tax Credit and other transfers that help lower earners. And since the tax rates for the richest 400 Americans are not available, the economists estimated those tax rates based on corporate profits. More widely accepted numbers from the Congressional Budget Office show the rich do in fact pay higher rates than the rest of America. The average 1% pay average federal rates of 33%, compared with about 14% or less for the bottom earners. Jason Furman, who is Obama's former economic advisor, looked at all the taxes paid and found that the top 1% pay a total tax rate of 40% compared to less than 20% for those at the bottom. As Furman tweeted, the standard data shows that the tax system is overall progressive. Now, Furman and others say there are still strong arguments for raising taxes on the wealthy, but for now, the numbers appear to show that the wealthy are paying higher rates than the rest of America. For Nightly Business Report, I'm Robert Frank.
And coming up, it's the biggest venture capital-backed private company out there. You may not know it, but your kids probably do.
Here's a look at what to watch for next week. On Tuesday, Goldman Sachs, Johnson & Johnson, JP Morgan, and United Healthcare are just some of the companies reporting their earnings. On Wednesday, the Federal Reserve releases its Beige Book, which is an anecdotal look at the economy across the country. And on Friday, tariffs on imports from the European Union are set to go into effect. And that is what to watch for next week.
When Facebook first announced its cryptocurrency project called Libra, it had a lot of big financial companies on board. But today, a number of them say they will no longer be a part of it. eBay, Visa, MasterCard, and Stripe all said that they see potential in the project, but they have chosen to focus on other efforts instead. This comes just a week after PayPal announced its withdrawal.
Most of the time, we talk about companies that are publicly traded, but it is also important to watch private companies, even those you probably haven't heard of. Julia Borston tells us about one such company that's growing very, very quickly.
China-based ByteDance is the most valuable private venture-backed company in the world, valued at $75 billion. ByteDance's company most familiar to American consumers is TikTok. It's a video-sharing app known for 15-second lip-syncing videos. It's been downloaded over 500 million times this year alone. ByteDance has about a dozen other popular apps, mostly in Asia. Its flagship is Toutiao, a Chinese news and information app. It also owns selfie app FaceU, Snapchat competitor Duoshan, and Indian social media platform Hello. ByteDance says its family of apps reach 1.5 billion users around the world every month. The company reportedly generated $7 billion in revenue in the first half of this year. But U.S.-based TikTok's business is still nascent. TikTok sells branded hashtags and is experimenting with in-app ads. But despite being the most popular app in the Apple App Store in the first half of the year, TikTok faces significant risks. TikTok's content creators can secure sponsorships or get tipped by fans. But TikTok does not share ad revenue like YouTube does, raising risks that creators could ditch the platform. Plus, there's TikTok's Chinese ownership.
The problem with a lot of the way that the Chinese government uses its soft power abroad is that it rarely needs to tell companies what to do. It acts in a way that requires sort of companies to guess what the government does and do it preemptively. There's no orders coming down from on high. There's just the understanding that you will do what Beijing wants.
Concerns about censorship prompting Senator Marco Rubio to call for a government review of ByteDance's ownership of TikTok. TikTok has already been fined nearly $6 million by the FTC to settle allegations that it illegally collected personal information from children. The company has promised to ramp up protections as it works to avoid more regulatory scrutiny. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And before we go, a final look at the day on Wall Street. Word of the partial trade deal sent the market higher. The Dow advanced 319 points after rising more than 500 at part of the day. NASDAQ was up 106. The S&P rose by 32, and all of the major averages were higher for the week.
And what a week it was.
Indeed.
That is Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great weekend. We'll see you Monday.